All right, good morning or good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Again, apologize for my voice here. As you know, it's been a trying last week, and something that still working on getting everything rectified here. But looks like it's gonna need some time, and yeah, so we'll see. Went in for a few tests this morning. We'll kind of see how it plays on out here. I was asked yesterday if there's a backup plan. Should I disappear for a little while? And the answer is yes. There absolutely is, and the challenge will continue to go on as normal. I have no plans of disappearing for any period of time, but anyway, in case you were wondering. But anyway, let's go take a look here. Challenge. We have one position on the board, and that's GLD, which opened yesterday afternoon, shortly after the Fed. The options are about 155 right here, so down about 150 bucks on it. This is one that opened up and was in good shape. Let me show it to you. And it's still in good shape, but not what it was this morning. But we basically had the Fed, we had the ECB, and what do we hear from them? We hear from them, look, gold, buy gold, buy gold, buy gold for many years to come. Gold is going to be a great asset here for many years to come, and not from a fear tactic type standpoint. We get a nice little running gold here this morning, and pushing on up. Generally, when you get these types of moves right here, these are central banks stepping in and buying. Very nice move, and then decides to just absolutely crater on a tweet. And we get a tweet here out of President Trump, basically saying a trade deal's happening. I guess that's not exactly what it said. Let me grab the exact words because I think the exact words are interesting. Getting very close to a big deal with China. They want it, and so do we. Okay. So that was the big news, big announcement. Drove stocks higher, drove gold lower here, and gave up basically all of yesterday's gains and this morning's gains with that move. Now GLD is moving a little bit here as I'm speaking. I do have an eye on it here, real quick. The stop level here, 137.74 here with it, and that's about 30 cents away. So I'll continue to hold it here, but we'll kind of see how that comes into play. But again, we talked about some of the risk factors out there in terms of the news, and in terms of just some news whipsaws. And it could be one way or the other. It's one of those things where we have seen tweets like this ahead of deadlines, come out and be very strong arm, be very negative, be very cratering to the market. We've seen them be very positive to the market. This one here has been overall positive to the market. But interesting thing about this one here today is if you go and you take a look at some of the stocks, like an Apple, just barely budging on, holding on to a gain here. Just kind of struggling to hold on, to some gain here. We do see the market taking another leg up. So as I'm speaking, about 15 points here on 30K volume here. So let's see. It may have something to do with. All right, nothing there on Twitter. I don't have all my normal feeds up and running right now to look at it instantly. But yeah, it's yeah, nice little secondary bump up. But you can see a lot more volatility here in the market today. A lot more kind of increased movement out there, and it's not in everything. It's not in everything. I mean, the Boeing's, the Facebooks of the world, the Googles of the world, the Twitters of the world, KB Home, Lennar, they're all trading lower. Chipotle Mexican Grill, but a lot of things more China related, trading on higher this morning. But more importantly, banks. Banks are just making that next rip here to the upside. Bank of America, J.P. Morgan. We talked about these earlier this week, and that if you're going to be a buyer in this market, you buy where others are buying, and who's the buyer for the banks? It's the banks, and we continue to see them having to step in, and you see bonds pulling on back here today, and so the banks, kind of sneakily continue to be the big leader, even though the talk is trade war, right? And what happens with all of that, and I do expect that as we've talked about, that banks will continue to lead. I would like to see a little pullback for myself to get in personally, from a stock standpoint. But I've ridden this year the stock I'm willing to ride, and now looking for another entry point. But today definitely not not giving anything cheaper here for it. All right. So anyway, as far as new challenge positions, something interesting. And right before I got on video, and this could be different, but there were 5 bearish crossovers here. Yeah, we have 3 that have been erased. Visa was on this. A few others were on this. I didn't note them down. But there were five stocks on the bearish crossover list today. And you think, well, market's up pretty big. Why would there be stocks on the downside crossover list? Yeah, that's just what we're seeing. And then on the bullish crossover list, there were 5. Now there are 6. No new challenge signals here. Intel, Chevron, Delta. Nice move in airlines. I'd love to go play the airlines, but no new challenge signal here with those two go into trade here. Vulcan Materials seems like this has been one that's been a crossover all the time. During the course of this challenge, seems like it's always crossing over, but never really moving here. When it comes down to it. So, it's just one of those where, okay, great. We're not seeing a lot of, individual stock action as far as, new signals coming in. But the question comes in is today's action, are we really seeing any major change? Or are we talking about a market that's different right here, right now than what it was yesterday afternoon? As we were talking about it, does this tweet change the market to that dynamic? Well, let's take a look at some of the market dynamics, right? Here's the bullish percent index, nice point move higher, right? This is one of those areas that has been slowing but not turning bearish, right? And so still same old for the bulls. No real major story change here with it. One of the areas where we had seen some of the major weakness come in were with some of the sector movements, right? But before we go look at that, let's take a look at the number of stocks hitting new highs versus new lows. This is an incredibly healthy number here. As far as number of stocks hitting new highs today versus new lows, this is almost an all-time number for the year. And on a year where there have been a lot of new highs set in the market, to see this number, that's a very healthy, very strong number. And I think if you're looking from a bullish standpoint, you're very encouraged by that number, for sure. You're very encouraged by that number. Now, from a bullish standpoint, you're also looking at the amount of advancers versus decliners today. There are only 1,000 more advancers than decliners today. You think, well, okay, all right. A few days ago, we had 1,500 more advancers than decliners. This isn't a mass participation in terms of every sector and every stock out there, but it is one that is growing in participation with this move. Now we saw some of the sectors and how some of these sectors had been playing out, particularly the transports, right, and how they had been lagging here of late. Take a look at them today. Up 1.2%, not lagging, right? Leading in that leadership role, not that laggard role. We look at small caps hitting a new high, in a nice position here. So not a very laggard type of position, and so we are seeing the bulls switch some of these, and take control of some of the take back control some of the metrics. When it comes to things like, the sector rotations, they're essentially shifting them from bearish to neutral, right? This is a group that has been one of those warning signs, one of those bearish, and we are seeing them switch it to neutral. Overall, the market vibe here today is a 3. And that's a neutral signal on it. But it has gone from 0 and just kind of climbed up to 3 here this week. Not a big, fast, bullish style type of move, but we are seeing the metrics, slowly recaptured, here by the bulls, and something worth definitely worth keeping an eye on here, as we go forward. So any change? Yeah, there's some change, right? There's some change, and we're gonna get more news, right? We're gonna get more news, and it's one of those right now where the market's set up for a deal to happen. And I don't know that we've been in that type of position since the trade war has started, where the market is kind of set itself to say, look, a deal's going to happen. Something's going to happen. It's going to happen. It's going to happen now. And yeah, you know what? We're pricing it in. And that's what we have right here. And chances are that's what we get, from the news, and that's what we see happen. And that will lead to some upside follow through. But it is one of those where it does put a greater risk on, if it doesn't happen, how much downside there is. And I think that's kind of how you have to look at this market. This is a market whose path of least resistance, given what we have seen and given how the metrics are moving, path of least resistance is likely higher. But should things not play out, very well for the bulls, it is something where the downside risk, the magnitude of downside risk, may be higher than it's been at almost any point this year. And that's a very kind of slippery slope type market to be in. It's one that, from an investor standpoint, right, you buy and you hedge a little, right? It's not a difficult type of situation. You get that hedge in. If you're looking to scratch a downside itch, we've talked about several ways to do it. Do it on the cheap. They're not very expensive to scratch those itches, but that's all they are. They're not confirmations here. They remain, more itches for most investors or traders, and one of those things where the metrics continue to point there to further, to the news kind of continuing to roll in the direction that it is. And until we see that shift, we're probably not going to see a massive market, reaction. The job levels that we saw come into play last week, they're still in play. And I know the market has pushed on higher here, but those levels are still in play. Those levels still matter. And they're in a position right now where the bears don't have anything, right? So the bears need to let them come on back down. I do think you can look at today's open price on the market as kind of a secondary level to say, hey, you know what? That level breaks. There's the warning sign, big warning sign. And so if you're going out there and you're buying today, you're buying aggressively, you say, hey, you know what? I want in. I don't want to miss another move higher. Today's kind of open price on the market. That's the level to that's the level to target, the level to eye there, and to be aware of going forward. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.